영상이 시작되기 전에 먼저 등장할 5개의 문장을 보여드릴게요. 빈칸에 들어갈 표현을 유추해보세요. 단어 하나하나를 직역하지 않고 전체 의미에 맞게 의역하고자 노력합니다. 그게 바로 영어식 사고의 출발이에요. 그럼 시작해볼까요?
What's the financial health look like? Net debt is down below 15% of capital. They frame these as adjacent businesses. It's leveraging existing strengths. Regulations are tightening.
Welcome to the Deep Dive. We sift through the noise articles, data, research to pull out what really matters for you. Today we're diving into, well, a giant, ExxonMobil. It's a really fascinating look at how one of the biggest players in energy is handling some massive, massive changes.
Exactly. Our goal here is to unpack ExxonMobil's journey, from its roots in Standard Oil through its current financial picture, and really look at how it's tackling the energy transition. What you'll find is quite a mix. Tradition, yes, but also some very careful adaptation.
Okay, let's start unpacking that. ExxonMobil's history is, well, it's practically the history of oil in many ways. Goes right back to Rockefeller's Standard Oil.
That's right, the breakup. And then, of course, the huge merger between Exxon and Mobil back in 1999. That created the modern giant.
And for so long, it's been, the symbol of big oil really shaping global energy.
Absolutely. But external forces have started pushing back, changing that image. Think about its removal from the Dow Jones Industrial Average in 2020.
Ah, right. That felt significant.
It really was. More than just a market footnote, it was symbolic. It showed that even these huge, established companies weren't immune to growing climate concerns and the need to adapt.
Okay, so that sets the historical scene. Fast forward to now. How does this energy behemoth operate today? What's the financial health look like?
Well, financially, they're still incredibly strong. For 2024, we're talking revenues over $340 billion.
Wow.
And net income around $40 billion. But the key thing, the real shift, is this focus on capital discipline. Their annual spending, their capital expenditure, has settled around $22 to $25 billion. That's way down from peaks of $30, even $40 billion in the past.
Capital discipline. Can you break that down a bit for our listeners? Does it just mean spending less, or is it more strategic?
Oh, it's definitely strategic. It's not just about tightening the belt. It really boils down to this. They aren't chasing growth at all costs anymore. They're focused, laser-focused really, on high-return projects, ones with lower costs, profitability, and shareholder returns over just getting bigger.
Which sounds like good news for investors then.
Exactly. It strengthened their balance sheet significantly. Net debt is down below 15% of capital, and they have a solid shareholder return policy. The dividend yield is around 3.2%, and they bought back over $20 billion in shares in 2023-2024. That signals management confidence.
Okay, but here's the really tricky part, right? How does a company so tied to oil and gas genuinely position itself for a lower carbon world? Is it a real shift?
That's the big question, isn't it? Their strategy involves significant investment, billions, in carbon capture and storage CCS. Big projects planned for the U.S. Gulf Coast. They're also looking at hydrogen and advanced biofuels, but they frame these as adjacent businesses.
Adjacent. Meaning?
They build on what Exxon already does well. Engineering, large project management, infrastructure. They're not, say, suddenly trying to become a wind turbine manufacturer. It's leveraging existing strengths.
Which is quite different from some European companies like Shell or BP. They seem to be diversifying more broadly into renewables like wind and solar.
It is different, yeah. It highlights a philosophical split. Exxon's taking a more conservative path, sticking closer to its core, but adding carbon management. The European majors are going for broader diversification, placing bigger bets on renewables generation. Exxon's strategy likely appeals more to investors wanting steady returns from proven areas, rather than maybe higher risk growth in newer sectors.
So looking ahead, there are obvious risks. Oil prices go up and down. Regulations, especially climate policies from the US and EU, are tightening.
Definitely risks. Volatility and policy are huge factors. But on the flip side, there are opportunities too. If their big bets on CCS and hydrogen pay off, those could become major new revenue streams. Plus, don't forget their traditional business. Growth from huge offshore fields, like in Guyana, is still a very powerful engine for them.
So wrapping this up for you, our listener, ExxonMobil today seems like this interesting mix. Deep roots, tradition, but also this very deliberate, maybe cautious adaptation. Focus on stable returns, not necessarily chasing explosive growth.
Exactly. And maybe the final thought to leave you with is this. Considering ExxonMobil's approach, blending that tradition, their financial power, with focused innovation in areas like carbon capture, what does their cautious evolution tell us about the overall pace of the global energy transition? And, how might that ultimately impact the path forward for all of us?
영어와 시사 경제 두 마리 토끼를 한 번에 잡는 알찬 시간 되셨다면 구독과 좋아요를 꾹 눌러주세요. 감사합니다.